Hi, everyone. Welcome to the very first episode ever of the Glass Half Full. Ryan and Sonu here. We're going to talk about some important stuff, but let's just set the stage, Sonu. So we put kind of out to pasture, is that the way to put it? The take five, but this really isn't going to be that much different, right?
Yeah, and simply because you and I cannot stop talking in under 5 minutes. So we all usually have a lot to say. Hopefully all of you like that as well. We've gotten good feedback, and sometimes this can go 6 or 7 minutes, but we'll still keep it short depending on the topic, I think.
Absolutely. We like doing these. These are weekly videos. We're going to keep doing them. But again, the glass half full. So let's get into that, Sonu, because clearly we did this a little bit last week. We kind of touched on if something were to happen in the Middle East. Well, now it's happened, right? Now it's happened. Will Iran derail the bull market? I mean, that's the very first glass half full. It's a pretty serious topic. Let's start high level. What do you think on that front?
Short answer, no.
Okay.
I don't think Iran will derail the bull market. Usually these sort of geopolitical events derail bull markets only if it coincides with a recession. Right now, we are seeing no signs of a recession. We haven't seen one for 2 or 3 years, to be honest, right? Yeah. I'll give you one data point. Auto sales for February came in around 15.75 million annualized pace. That's not bad. Ideally, it'd be more than that. But that's a pickup from January. And that's a sign that consumers are still spending, right? So I think there's one data point for you, if you will.
No, that's right. We had some recent manufacturing data was solid. Some services data was solid. We've talked before about this earnings season we just had came in way better than expected. Are there some cracks? Yeah, labor market, maybe some cracks. Consumer confidence is low. It's not perfect out there, but we don't see a recession. Let's just keep this fairly high level and simple. We looked at 40 major geopolitical events throughout history, starting back in World War II, Sonu. And, the median return 6 months later was up 5%. And these are the big ones. These are wars, these are assassinations, these are all types of really bad things that have happened. And the bad returns were the times that we actually were either weakening, about to go into a recession and something happened, or it outright caused a recession. So again, if we don't think this is going to cause a recession, there's probably reasons to be a little glass half full and optimistic. What else on the economic front are we missing, you think?
The biggest concern here is gas prices. Okay. Obviously, anytime something happens in the Middle East, that impacts the price of oil. In this case, oil prices have been going up, perhaps in anticipation of hostilities in the Middle East, even before all this started over the weekend. So combined with the increase after all the attacks took place, with, oil prices increasing year to date, WTI prices are up about 30% this year over the last 2 months, let's say about 9 weeks or so. And if that's happened, that's sent gasoline prices at the pump up from under $3 a gallon. I'm talking about the nationwide average to about $3.20. That is the biggest increase on a percentage basis since 2022 after the Russia-Ukraine war. It is the largest dollar increase or cents, right? About 20 odd cents plus since 2005. So that's a big jump. That's because of that's the biggest impact, right? Most direct impact that everyone's going to feel is like, oh, gas is more expensive at the pump. What does that do for the economy? Usually, if this continues, it starts to become a problem because it becomes an inflation problem. People, if they're going to spend more on gas, they may have to spend less on something else, right? And it also impacts how the Federal Reserve thinks about interest rates. If they think, okay, inflation's going up, and if inflation persists, remember, it's not just gas prices. Diesel prices have been going up as well. That's going to impact food prices. Jet fuel prices have been going up. That's going to increase costs for airline tickets and things like that, right? If the Federal Reserve thinks that inflation is going to be on the higher side, they will be less likely to cut interest rates this year. That is a potential risk.
So you mentioned the biggest jump since 2005. Was that Katrina by chance, or do you know off the top of your head? Was that one?
I believe it. Yeah, that's a good point. I didn't think of that. Now that
because it takes a big event to have a jump like that. So you're talking,
Katrina took out a lot of refineries.
Exactly. Right? So we're not 100% sure there, but it very well could have been Katrina, or at least another big hurricane back in 2005. There was a big hurricane season. So a couple more thoughts on this stuff. So from a market's point of view, it's been a heck of a run. The Dow Jones Industrial Average started trading back in 1896. Sonu, it's up 10 months in a row. This is one of the longest monthly win streaks ever. Now, let's be clear. It was barely positive last month, a couple months before that, barely positive. Still, 10 out of 10 higher is pretty darn good. Some of this volatility we're seeing, it's uncomfortable. We understand these headlines are just, a lot of them horrific, the headlines. And technology stocks, some other areas obviously been hit hard, but the baton's been passed around because energy, materials, industrials, even utilities had a huge month last month. That's the lifeblood of a bull market is rotation. So we're optimistic that, again, this bull market's alive and well. We're following the headlines out of the Middle East. We'll keep talking about it, but we think this bull market's still here. Sonu, last comments from you to wrap this up.
You mentioned this at the top. As of now, we just finished earnings season.
Yeah.
Profit expectations have been rising. And as long as profit expectations, if you think of a chart, for example, if you're looking at a chart of profits, it's going up and to the right. As long as that continues, stock market should also go up and to the right, but it's not going to be a smooth ride. There's going to be volatility.
It's true. We've talked about the dual tailwinds to bull market: higher profit margins, higher earnings, higher corporate profits, and both of those continue to trend higher, likely suggesting, again, this bull market is still alive and well. So everyone, we really appreciate you joining us on the very first The Glass Half Full. We'll be back next week. Take care, everyone. Thank you.